every time a company is named, you get this little like there's parentheses and then a ticker symbol after it.
Yeah.
That is exactly what Kevin's talking about. This ridiculous sort of like, we are going to sort of turn everything into an actionable trade, and that's
right.
It drives me up the wall.
But that's a big part of what drives both Bloomberg and Reuters and the Journal, and even more so other major market newspapers, even like the New York Times. I mean, at Bloomberg, and I know the same thing at Reuters too, and I know Journal counts this as well. A lot of reporters are measured against what they call, stories that you break that literally affect the market, that move the market. And sometimes you'll even see these like spikes that, you'll break a story on something, and then all of a sudden that equity will trade like really high and then come right back down. I mean, those are like bots basically executing trades against like headlines. So you literally moved the market. You literally affected millions of dollars by your writing, your reporting, and so something you can measure.
To be a good thing, by the way.
And that's reinforced, and so then reporters go after those stories, more than anything else, irrespective of what do readers generally need to know, what things about the world economy or U.S. finance
which creates this culture of chasing the micro scoop. If you have a story 15 seconds before the other guy, that's great, and right. It's ridiculous. But like literally, Reuters and Bloomberg, they have entire desks devoted to just like comparing who had a story with 5 seconds before the other guy,
because that can literally affect if you're a trader, the 5 seconds means multi-millions of dollars.
Well, actually, it doesn't. That's the kind of thing which neither Reuters nor Bloomberg will ever admit. Is that what happens is the story comes out, and then the price goes up because the story has come out, and the number of people who saw the story and then were able to buy at the lower price, and then the price goes up and then they make money is like either 0 or 1. The ultimate. Most of the time,
it could be one trader trading for a huge portfolio, conceivably.
But no. I mean, most of the time it's just 0. No, most of the time, what happens is that as soon as the story comes out, the price has gone up, and you can't buy at the old price anymore. So no one's actually making money from this. No one.
Except for Bloomberg and Reuters.
Exactly.
Well, yeah. I mean, I actually heard had one friend a long time ago recount to me how they were told by their editor that at the end of the very first paragraph of every single article they wrote, it should be clear to the reader implicitly whether this is buy or sell. The article is either buy or sell. If it's neither of those things, you should seriously consider whether you have the right angle on it.
Well, actually, there is. I know Reuters has this as well. Is that Bloomberg has like a headlines desk that literally just writes headlines, and they've actually done analysis and found that a lot of the traders have set up trading programs that can read headlines and parse them and know how to execute a trade or to buy or to sell against that equity. So they're not even actually reading the story. It's not even human eyes that are reading the story.
And to give you like an idea of the scale of this thing, this is a huge business for Reuters. It's called
algorithmic trading.
I can't even remember what it's called. We have this massive business of machine readable news where we serve headline feeds to algo bots, which then trade automatically. This is orders of magnitude greater than the entire media business.